Hello and welcome to this week's market update. It's November 25. It's starting to get a little bit cold if you live on the northern hemisphere, but the markets are nice and warm. As you know, there's a lot of activity in the market right now, and if you're a trader, it looks like you'll have a very good holiday period, a very good Christmas. So, let's cover that today. Before we start though, I need to stress that financial markets unfortunately is high risk and we may lose all of our invested money. If you're trading with leverage, you may actually even lose a bit more. And as you know, with no risk, no return, right? If we don't do nothing, we're not gonna do nothing, we're not gonna make anything. So you need to bear that in mind, okay? I'm also gonna give you my point of view on the markets. I've been trading for many years. My name is Alejandro Zambrano and I'm a successful trader. But just because I'm a successful trader does not mean that I don't have losses. So managing those losses, managing the risk is probably the most important thing when it comes down to trading. All right, so let's do a little bit of a recap what happened last week. Why? Well, because what happened last week is going to guide us this week as well. So we had a terrific time if you're a crypto trader. Altcoin season is soon about to kick in. In fact, I would argue it's already started. That is when the smaller coins start to catch up. We have already seen even some old coins that should be dead since a long time was down like 100% in a couple of days this weekend. So it's a dramatic moves in the market. In the case of Bitcoin, it grazed the 100K mark, went up to 99.5. And yeah, all around very good strong moves in the crypto market, and it's all because of that US election, guys, and the halving. You remember the halving that's supposed to give us the big move in after from April. That didn't happen, but the targets from the halving remain in play. Now you might think I'm a bit crazy for this, but it's not me saying this. The people that developed the halving method, people like Plan B, they say that Bitcoin should be trading closer to 250,000. Now I knew this already last year, but obviously we were not talking about 250,000 because one would think you were crazy. That's why we were talking about 100K. But now we are at 100K. So it's time to sort of be more realistic and sort of say, okay, maybe we'll do another push to the upside. Now, are we going to reach 250,000 within 12 months? I don't think so, but maybe 120 before Christmas, and then maybe we have a correction. You know, if we have a 15% slide, maybe 20, would not surprise me. In all bull markets, you will have some sort of correction. Now, how about your USD? If you are Forex traders, well, it's going very well there as well. Like your USD is just trading to the downside, downside, and downside. It reached a new two-year low. And what's interesting here is that it's very easy trading. There's no question about that. And you can actually make some serious money trading your USD as well. I've done it myself. Effectively going short, you maybe have like a 30 pip stop loss, 40 pip stop loss, and then the market just plunges. And because you're using leverage, you can get a very nice healthy return. So that as well, I think is going to continue. We'll talk more about that today as well. And also stock indices. All right, stock indices push to the upside. And we talked about buying the dip in stock markets like the S&P 400. That worked out fine. And I think if one would have bought last week, you're in a very nice position because this is the time to be bullish on stocks. October, November, December, January, February, those are sort of the best months for stock indices. And people are soon going to start to talk about the Santa Claus rally, the Christmas rally, but we're already long, we're already bullish, you know, so we are already ready to take advantage if that would come. We'll talk more about that in a minute. And now what happened on the economic point of view? Well, not everything has been great. Look, inflation moved up a bit in Canada and the UK. That's obviously not great because we want inflation to be lower so we can see the central banks cut interest rates. Now, as well, Eurozone PMI, these are leading indicators. They both dropped below 50. So services and manufacturing in the Euro area is doing really poorly right now. And because of that, there's now a 50% probability that the ECB will cut interest rates with 50 basis points in December. So that is what people are gearing up for. And this on its own, forget about Trump for a minute, this on its own is enough to be bearish Euro USD. Now, what adds even more to be bearish Euro USD is this. Jobless claims keep on dropping. So it was 213,000 people that applied for unemployment benefits in the US last week, which was lower than the 220K anticipated. Now, these numbers coming down just means that less and less people are looking for help in the US. It tells us that the labor market is doing good. Also, US ISM services jumped from 55 to 57, and the service sector is about 70% of US GDP. So that big part of the economy is now moving up a bit, accelerating. So what you're having is that you're having the US economy accelerating, and then you have the European economy descending, growing much more slower. That is enough to be bearish Euro USD and enough to be bearish Euro. Now, we also had some reports. Nvidia did very well, beat estimates on earnings per share and revenues. And that obviously is positive for stock markets. Walmart as well had very good earnings numbers. So markets are bullish on that. The other negative bit is that you saw the news. So you have the idea that, well, not the idea, Ukraine can now use middle to long distance missiles against targets in Russia, which they did, I think, on Tuesday and Thursday. And Russia decided to retaliate with their new missile systems. So it's been quite intense there. And Russia as well has changed the rules to when they can use nuclear weapons. And that caused gold prices to just sort of soar to the upside. So that is something that that lifted gold prices quite immensely. So what can you focus on this week? All right, if you're trading Forex, Australian dollar versus the USD in the middle of the night, but of course, if you're based in Asia, then it's your morning. So Aussie dollar USD, say on Wednesday, very interesting. As well, half an hour later, you have the New Zealand Central Bank rate meeting where they're going to cut rates most likely from 4.75 to 4.25. What we want to know what's going to happen next, okay? There's even talks they're going to cut by 75 basis points. That's right. So they will go from 4.75% to 4%. Now, you can imagine how that's going to impact something like the New Zealand dollar, right? It's going to come down plummeting. So is it a good reason to stay up? Yeah, definitely. If you're a night owl and you like to trade, then definitely keep an eye on those. And if you happen to be in the Far East or the Middle East, maybe Far East, I guess is easier, will be early morning, so definitely good time to watch the markets. Now, in the afternoon on Wednesday, you have US GDP, US durable goods orders, and US core PCE. The PCE is the most important one, and durable goods orders as well. That if inflation is too high and durable goods orders for some reason would plummet, then anticipate a bit of a hiccup in stock indices, a bit of a hiccup in crypto prices as well. Will it influence Euro USD? Maybe, but not too much. At least I don't think so. On Thursday, you have something we don't really cover too much here, but with the Japanese central bank most likely looking to increase interest rates in December, you do want to keep an eye on Tokyo Core Consumer Price Index. Again, it's sort of very late in Europe, but early morning in Asia. So definitely if you're watching or trading the yen, you do want to keep an eye here. You might potentially get some trades in there, which obviously would be super interesting to get involved with. What else here? Friday. Yeah, Friday have European inflation. So European inflation, obviously super important for the Euro GBP pair, very important for the Euro Yen pair, and very, very important for Euro USD. So you have another reason here to focus on your USD on Friday. So let's take a look at some of the charts. So last week we're trading here, and I said around 106, people were probably going to go short. So around 106 with stop loss orders at 106.64. And bear in mind, we've been bearish much higher since the US election. We've been bearish. And anyway, so that it was to sell. So this was this part here. You can see we went up slightly above 106, but not above 106.64. And then the market just came down plummeting. A new 2-year low. When you break a 2-year low, you can even go lower. So if I'm looking at this today, I would argue that people are gonna short between 104.63 and 105.56. Now, just because we push above 105.56, it's not necessarily going to change the whole world, but the risk to reward ratio is around these levels. In fact, the price right now is at 104.78. So I will give this maybe another day or two, but I think afterwards it's going to come down lower. S&P 500. So last week we said people are probably going to be buying between 5,880 and 5,600 and 5,763. As you can see here, the market went all the way down here. So this is the outcome. So it went down to this level here, 5,880 is this level here. So we pretty much hit that spot on, overshot a little bit, but then bottomed out and went upwards. If one is trading short term, then booking profits around 6K is a good idea. If one wants to hold on for this one and maybe relax a bit and hold the positions because you want to be part of the Santa rally, then I would keep this for maybe 6,100, because the next couple of weeks are usually very powerful stock markets and they tend to be very bullish. I will continue to be bullish about 5,852. So if we have a dip here, I think people are going to get involved again. How about gold prices? I said maybe look to short sell and be bearish below 2,626. You see, we went up. So if one would have sold here, you would have been stopped out because the market just went up and up and up, took out that level, and then just continued to soar on the basis of the geopolitical tension that we were seeing in the markets. Now, if we're looking at this day, the market has now turned bullish, went up a bit. And I think if we go down to something like 2,663, I think people are going to be buying with stop loss orders all the way down here at 2,615. How about crude oil prices? So I think crude oil prices is definitely something you want to keep an eye on. I think we're going to have a relatively easy trade here at one point. Remember here in August, we were here and we said sell for this to go down. Well, it did go down. I think it's something very similar here. You got three lows. And if we break 70.16, probably down 64K. I think that is what makes the most sense right now, really. The alternative will break to 76.16 and then this push to the upside. Now, my preference is for the market not to go straight up, rather to go up, spend a day or two trading sideways, and then go to the upside. That's how we can have a very good risk to reward ratio. Now, keep an eye on silver as well. This is silver, and you have a very interesting situation here where the market is pretty much needing to catch up a bit with gold. So you're dealing with a downtrend, lower and lower highs, right? But here we took out this, so now we have a higher high and also have a higher low. So I would say a break to 31.52 could lift the price to 32.12. That's sort of a 60 cents move. And I would say if we break out here, as long as you don't trade below 31.25, you'll hopefully go up to the first level. So you're looking at possibly, risking about 27 cents to make about 60 cents, and maybe a bit more, another 60 on top of that, so 120 cents if we will go up to 32.73. Bitcoin prices. So last week Bitcoin was like this, and best time to buy Bitcoin was actually after the election. We did a US election special, and even before that we did talk about the breaks to sort of 72 level, how important that was. So this should not have come as any surprise. You should follow us on TradingView and here, and also go on thinkmarkets.com. Like, everything here was extremely well telegraphed. It should be no surprise for anyone. So the problem, what we're dealing with here, is that it's very difficult to get a very good position here. Now, I did buy Bitcoin around 60-ish or whatever it was around the election, 65-ish, and I booked profits at just around 88 or so. And since then I shifted into some altcoins. Now, what's the game plan? Okay, I would argue the game plan is the following. So we're very close to take out the 100K mark. I think if we take out the 100K mark, we'll go to 105 this week. So that could be an option, but you would need to use a smaller time frame to figure out how to use entries and stops. And then alternatively, if we have a hiccup, so a slide, we go down to 93.8, maybe 90, then I think that will be a very, very interesting situation. And at that point, if we would drop to say 90, then you're dealing with a 10% slide. So then a lot of the altcoins that have done maybe 100% or so, they would be down with maybe 30, 40%. And that could be a good opportunity to focus into alts. And that's it. That's the main part of this presentation. Let me just see here if you guys have any questions. If you don't, we will wrap things up. So I'm on Facebook right now. I'm gonna see if you have in. Oh, there we go. Can you please show me the NASDAQ 100 chart? Yeah, of course. Let me load the charts then. If you just give me, there we go. All right, so this is the NASDAQ 100. This is a daily chart. So with the daily chart, we're dealing with an uptrend. There's no question about that. So we have the lows here from last week, which are really important for this market. That's the 20K mark. We can now zoom in, see how we can manage this in the short term. So if you're looking at this in the short term, you have resistance up here. And then you have some minor resistance here as well. We are right here. And I would argue that it's better to, while this can easily push up, there's no question about that. You know, with the election coming up, with the election, they're promised to deregulate, so get rid of red tape. So if you want to build a new mine or excavate for oil or set up a new company, or if you want to hire and fire, you know, all that's going to be easier. There's going to be less tax. So we had that very strong move, and then we have a very strong correction. But if you're looking at this today, you know, if you look at it like this, if you want to buy right here, then you need to put stop loss realistically down here. And then if we just go to the first resistance level, you'll make 1.41%, but you can risk 3%. So it's not ideal. The only time you would buy here is because you have a very positive outlook on the future, which is nothing wrong. I personally think with the deregulations is going to be a very, very, very strong push. Now, this is what you will look at, something like, imagine the market just closes here, which is probably will not. It might go up. I think it's going to go up. Maybe 21,600, maybe 22,000 before the end of the year. But say you will close here. Then typically when you have a Republican president, a Republican Senate, and Republican House, on the S&P 500, you get about 13% return, which means you're going to be here. So yeah, if you're a long-term investor, you can be like, okay, I'm going to make 13% return by risking 3. Your risk to reward ratio is 4.3 at that point. So for every 1% risk, you make 4% return. But there are better options, and I think the better option in this situation would be to buy a dip. So effectively just hold back. Say we go down to these levels here, around, I would say 20,600 and, yeah, 20,635. I would argue this is better because here you would then risk like sort of 2%. And if we go to the high, you make a 1.48. And then if you want to keep this for the end of the year, maybe another 6% upside from here. So that's a 3.52 times risk to reward ratio. And if you wanted to keep this until end of next year, you get a 7.81 times risk to reward ratio. So that will be even better, I think. Just waiting for a dip. I mean, that's what I would have done at least. So let me see here if there's any more questions. So that was on YouTube. So YouTube is the place to be. Okay, we got a question as well about the dollar index. All right, so that will be, let's take a look at the daily chart to get a big picture perspective. So this is the dollar index where you're dealing with, we were stuck in a massive range. Think about that. In October, we're down here. So this, I think that the best way to interpret this one is just to look at it like this. So you draw a line like this on the daily chart, like that. So we were stuck in a big triangle, and I like to measure my triangles in the middle, in the meaty part. If you look at the books, traditional books, they tell you to measure this section here, but usually you get too exaggerated targets that you never reach, and you'll be stopped out long way before that. So if you look at this from here, it says that we can go up to sort of 111.93. Now, if you look at this from a short-term perspective, you can see that we had a breakout, and then we had a bit of a correction, and you have this high here as well. So this right now, this low that we are dealing with here is really important for this pattern. Technically, we can trade below it. We can go all the way down to maybe 105, 104.50 without really changing, but it would not be good if that were to happen. So with that in mind, we can now focus on this bit here. So if you look at this bit here, and you'll be saying, okay, the short-term trend is bullish above the lows here, and you could put Fibonacci on, but I don't think it's not necessarily needed. Let's do it just for the sake of it. I think it's gonna be, oh, thanks for that. So the market right now is here. Okay, so it's here. So it's done a 61.8% correction. It also happens to be where the prior high is. So I think this, if it's gonna bottom out, it should probably bottom out here. And you could, this is the thing with trading, right? We know what's happening. Trump is gonna gain power. I just told you that the US economy is doing quite good, and the European economy is not doing that good. So what could choose here? Okay, what would be the risk to reward ratio to implement here? Oh, you know, there's no right or wrong here. I would probably just give this a try. So just be bullish above the November 21st low, and then, you know, if we reach the high of last week, you get a 2 times risk to reward ratio. So if you risk $1,000, you make $2,000 return. Now, to go all the way up here, guys, is gonna take a while, but you can see the risk to reward ratio here, right? It's like risk $1,000 and make $9,000. If you want to be 100% certain that you're gonna make any profit, you can always lower the trend defining level to the stop. That would be to this level here, and your risk to reward is 5.8. So you risk $1,000 and you would make almost 6. And that's the dollar index. Okay, so I think that's it for today. We're gonna wrap things up. Cataligo, thank you so much for, we'll see you next week. Cataligo, thank you so much for the questions. I really appreciate that. Do join in and do invite friends. Don't forget to hit that like button, because the more we see that you're coming in here and joining us, obviously we'll spend more time on this, because there's gonna come a time when my boss asks me how this is going, and if there's no interaction, no questions, then the boss is gonna say, oh, maybe we should do something else. So if you do enjoy it, make sure you join. Thank you so much, and I'll see you same time next week. Goodbye.